bring it back from the old days. If you want Vaz to break down a volume profile on a stock that you're interested in, drop in that ticker. She is going to pick one or two names that catch her fancy, and she's going to break down a volume profile. That's right. We're bringing back volume profile by request on Wednesdays with Vaz. So if you want to see her give you break down your stock, drop that in chat. So we got Vaz. We're going to break down the charts. We're going to do a little volume profile by request. We're going to be talking SpaceX, and then we're going to roll right into myself, Leisha, and Hannah talking about what we've seen in SpaceX so far and what we can expect to see going forward and how we're going to play it. It is going to be a fun show. It is going to be an insightful show. So let's get this ball rolling and roll credits. Good morning, everybody. Good afternoon to my friends across the pond. This is the State of the Market Show. I am here every day at 10 a.m. If you're watching me on YouTube, please give us a like and subscribe, or better yet, shoot my team an email, support@optionpit.com, and join us live. Twitter, same deal. Give me that heart. Give me that retweet. It's good to see all of you. As we open the show, we did just get a nice bit of data. Pending home sales just came in. They were expected to be about 1%. They're up 3.8%. And business inventories came in line, up 0.5%. This morning, U.S. retail sales kind of blew the doors out of the water, up 0.9%. Minus autos up 0.8%. Both of those beating. There's some continued concern about the consumer, but that consumer continues to hold up. And out of that, you have the S&P essentially flat. You have the Qs up about 0.25%. You have the Dow up about 0.5%. And the Russell 2000 is up 0.7%. So what we're seeing here today is kind of what we've been kind of expecting out of the market. Rotation into industrials, rotation into small caps, and maybe a little bit of weakness in Mag 7 or the Elite 8 or the Terrific 10, whatever alliteration you want to use. Maybe those end up a little bit softer because leadership is not coming from the Qs right now. It's coming from the industrials. And what does that have to do with? That has to do with the bond market and with oil. As we open the show, oil is marginally higher. Nothing big, but it is marginally higher. CL, WTI, light sweet crude, up about $1.37. Brent just right around $80. So they've come off dramatically, and they're probably going to sit here for a little bit. But with that drop in oil and stabilization in oil, we've seen the bond market show some strength the last few days. Today, it is essentially flat, but it's had a nice run over the last few days since this deal was passed. The 10-year is up almost a full point. You want to use something like IEF, which is essentially flat. And you can see it's now bumping against the 50-day moving average. It is at the levels that it's been at in the past on the 29th. For this rally to continue, we want to see the bonds pop. And What is going to make that happen? The answer is the Fed. Now, the Federal Reserve is ditching dot plots. I don't think that's a big deal. They've never been anything we've really followed. What's important today is that it is Warsh's first conference. What is he going to say? What is his tone? What is, how is he going to move markets? Heading into the Federal Reserve announcement, options are not maybe as expensive as you might think. With us trading 75.20, the market is looking for about $45 of movement. Well, we consider how much we've been moving up and down every day. That doesn't seem like a lot, does it? The answer is no. I think that if you told me, Mark, you have to buy this or you have to sell this, my answer would be, I want to buy this. Sorry, my dog was trying to eat a computer cord. She's a puppy, folks. And then, so $45, I'd probably want to buy that as opposed to sell it. And the big thing, and I think we're going to start to see this develop over the next couple of days, and this is what could put some real power under the industrials, is Fed Fund futures. Going out to December, we have about a 40% odds of no cut and a 0% odds of a cut. And that means we have almost a 61% chance that they want to raise rates between now and December. I think Fed Fund futures have it wrong. And I think you're more likely to see rates drop than rally. And as the market starts to realize that, I think you're going to see more strength in the industrials. All right. Now, I've kind of given you my Fed rundown. I thought it'd be valuable to take a look at some charts, how we might move. And if I'm right, how do the industrials move around? What happens to the Qs? And of course, as I said, if we've got to take a look at a couple of volume profiles in some of the names you are requesting, then Vaz is going to run through them. So it's the return of volume profile by request. Aren't you excited, Amin? I am.
Oh yeah. We should have done that a long time ago.
Yes. So with that, let's bring in the one, the only, the pharaoh of the Fibonacci. She is France's finest. She is Olivia Voznenko, otherwise known as Vaz. Good morning, Vaz.
Oh, sorry. I was just chewing on a computer cord. My bad. Ivy is the only one with the good ideas, Mark.
Good morning, Vaz.
Hi.
Kind of a wild market this morning. Kind of as dead as it is, a lot of movement up and down, a lot of movement in the chips, and a lot of confusion as to where we go next, because SMH has had itself a ride since Friday. Monday, massive rally. Tuesday, give all that rally away and more, and then come back in on Wednesday, and we're buying it right back up. That's putting a little bit of wind underneath the triple Q, but we're seeing leadership out of the Dow Jones and the Russell 2000. So what are you seeing in your, let's start with the SPY. What are you seeing in your charts?
Totally. So I'm just going to go right to the 5-minute chart, because actually even the 1-minute chart, because right now Game Plan has a heat zone that is about to trigger. And that is going to be around 751-ish. I don't want to give too much away because obviously this is a gated trade here. But we are looking for a nice break above this. You do have multi-day VWAP that will also help propel prices higher. And my bias is I think that the market's going to scream higher today. I think this is a very bullish setup for the market. I think that Warsh is Trump's dude, and he's not going to want him to bring down the market. So I think that the Fed today is going to be very bullish and that the path to least resistance is higher. There is a little bit of timidness going into it, but I think that it instead of hesitation, I'm looking at this as almost like a coil and a jack in the box for price to just scream higher.
Okay. So you've got a heat zone up in game plan. This is when, for those of you unaware of game plan, Vaz gives zones just about every day where you can figure out, hey, if it hits this zone, closes on a 5 minute, I want to buy a call. If it hits a bear zone on a 5 minute,
1 minute.
What's that? On a 1 minute. Okay, that's a change. If the 1 minute candle closes in the game plan zone, we want to go long if it's up. And on a bear zone, if the 1 minute lands in that zone, then we want to buy a put and ride it through the zone. It's a really amazing, fun way to trade. And, that's why there are 500 people in her room right as we speak, staring at a set of zones in spot.
They watch my chart like a football game. Amin has said, I'm like, it's so true. Yeah. We're in there like.
All right. So Vaz, before I want to see the cues, but really the cues are being driven by SMH. And that is where there's market volatility. Look at this thing all over the board. Look at that gap on Monday and look at the way it just powered through that gap yesterday and then is getting a little bit of a bid today. The cues look like a less volatile version of the same story. What are you seeing here?
Okay, so what I'm seeing is if you wanted to be bearish in SMH, this was your opportunity to fill the gap. And now that the gap has filled, I think that that's over with. I don't think this shows any weakness. It was the move has kind of been done. I don't know why. It's just my spidey senses and just trading this and looking in the rear view mirror. It's like, okay, that was a great trade, but I still feel that the path of the least resistance is higher. We are protecting a lot of support here. And yeah, I'm with the bulls right now, guys. It's so not like Vaz, but here I am. So shout out to the bulls. You have a new recruit.
All right. Are there any other charts that you wanted to look at before we take a look? We take a couple of I am going to ask you about SpaceX at the end, so save that one.
I think we all candidly, I put every liquid asset I have into SpaceX.
Oh, wow.
Yeah.
All right.
I think you know that, Mark.
Yes, I did know that.
Did pretty well in that one. So, that's really all I can talk about with SpaceX. And I think that this thing is going to continue to go higher. I'm actually going to jump into it right now. If you are looking to trade something like SpaceX, it is giving you every amazing opportunity to go long in this stock. And I would go long with the momentum strong versus just trying to catch a bid here, because when an IPO loses its love, or like, goodness, if I'm wrong about the general market, being supported in this bullish bias, you have those two factors that are helping something like SpaceX right now. So it's easier to ride momentum strong in this very long bull market that we've been in. And we are currently in bullish conditions, narrowing down. Anytime you see any of these levels broken, SpaceX should run higher. I understand you guys have options to trade with right now, but this was one of the greatest trades in my life. And sometimes you gotta risk it all to make it all.
Yeah, great trade, and it's definitely popped. And so Vaz, I threw out that we're going to do a little VP by request, and you got inundated with request names. Which one?
I do.
Which ones did you want to look at? And let me address why I'm wearing a red shirt. Okay. People are like, why is it Red Shirt Wednesday? We're closed on Friday. All right. So today is synthetic red shirt Thursday. So tomorrow is our Friday. Today is my Thursday. So when we're closed on a Friday, red shirt Thursday happens on a Wednesday, folks.
I think that's fair.
Vaz, a lot of fun ones to look at. Were there?
Yes.
Which ones did you want to jump into?
Yes, I absolutely parsed the chat, and we do have some good requests. Like I said in chat, I'm like, make it good, okay? Make it good, guys. And you did make some great requests here. So I'm gonna start with. Oh, should I start with my favorite or end with my favorite? All right, I'm gonna end with my favorite. We're gonna start with Apple first. So Apple is interesting because it's almost like the antithesis of the market. Anytime the market is showing some sort of weakness, which you could argue is showing a little bit of, I don't want to call it weakness, but the market is showing a little bit of a stall, if you will, as we try to retake these all-time highs. And that is when Apple is really sneaky, and it's almost like like an alternative trade that you could do. So Apple has a nice wedge that it's breaking out of right now. So when you have, this is a wedge, as you could see, we had that channel lower that kind of got more narrow. And through that, we consolidated and we are now popping. So easy technical analysis, you just take the mouth of the wedge to see the measured move. When did we break out? Right here. I'm seeing a first upside target in Apple at 305, which I know for my, some people are watching this like it's $5 more. Well, if there's options that are traded Monday, Wednesday, not technically Friday now because we're off, this can be a really interesting trade to make into tomorrow. And I do see Apple approaching at least the point of control at 311. So not much of a volume profile trade, but more of a technical trade.
All right. And then what was your favorite one that you wanted to go through?
Can I do one more before my favorite one? Or are you kicking me off?
Yeah.
Okay.
No.
It's fine. You can kick me off. Okay.
I would never kick Olivia Vaznevo off. Don't even suggest such ridiculous things, Olivia.
When Mark starts calling me Olivia, you know I'm in trouble. Okay. So the next one that I like is Microsoft. Microsoft is the opposite. Microsoft usually can, when everything else is shining, Microsoft can shine with it. It was interesting though, as we did go through bearish conditions a month ago, and when Microsoft reported earnings, while Apple was shining, Microsoft kind of gave up its initial earnings craze. So we gave that all back, which is fine. But I do see Microsoft. This one I would look at to get a little closer. That's kind of the riding the coattails. Microsoft, you could be a bit, if you want to be a little bit of a badass, and you could say, hey, we're finding some support here in Microsoft. And if you can look at soon dated options to go long, I mean, to the tune of it just moving like a couple points, I think that this one is worth the risk to do that. If you could find a nice priced option. And again, just looking for a quick move, like a couple points, especially into today, where I think we're going to get a bid with the Fed. Hint, hint.
Okay. All right. Now, what was your absolute favorite one?
My absolute favorite one is Palantir. And this one is completely, did you say, oh, good?
Yes.
Really?
We've got Palantir on the wiretaps. I want you to be excited about this one.
Oh, I missed that one on wiretap. I'm trading from France right now, guys. So I've been a little light with my trading, but okay, that's great to hear. So let me talk about Palantir. This is actually one of my favorite volume profile trades, and it's just through trading the volume profile constantly. You have a lot of these, what do you say? Like these, old adages about the volume profile. It's like, okay, you look at the point of control. It could be like, this is that big node right here. If you guys know, whatever the case is, they're looking at support, resistance, Hey, we broke resistance. Now we're going to stream higher. I actually have found this unique strategy with the volume profile, which is I like when there's pressure at the point of control. So the point of control is right here. That's that long node on my volume profile with the red line going through it. And a lot of volume profile traders or a lot of people would look at this as, hey, we should short here. And understandably, short term, you can do that. There is pressure. But again, like I talked about with the 5-minute chart today and the 1-minute chart, I see this as a pressure box. And I kind of like that it's knocking up on this point of control because it's squeezing it to burst. So instead of riding the coattails on this one, and that's why I put these in a row. I kind of like jumping in on this one because it looks like it is going to explode, and it's in that pressure point to burst above that point of control where you can get in at a better price than it breaking out and then still going higher, but you can get a great price here. So yeah, Palantir is my favorite.
All right. Well, your charts to God's ears. Let's see Palantir rally. I'm a big. I'm in calls in that right now as we speak through a service called Wiretaps that is available through TradeToClose.com. All of that you can check everything out. Vaz, I am up against it. I got to bring on Hannah and Leisha here. I hope you have a wonderful day. I'm going to see you, as I do every day, at Trade to Close this afternoon. Thanks for your time this morning. And folks, going forward, if you want to send us your volume profiles by requests going into Wednesday, you can email them to support@option.com, and we'll contabulate them and compile them, and Vaz will pick a couple of her favorites. So volume profile request is back. All right, folks. Olivia Vaznenko. Vaz, thank you so much. I hope you have a wonderful rest of your, it's afternoon there. I hope your afternoon into your evening is amazing, Vaz.
Bye, guys.
All right, folks. Folks, stay with me. That is the end of the State of the Market show, but it's just the beginning of our deep dive into SpaceX. SpaceX options listed yesterday. They broke every record on the book in terms of option volume for an IPO. And I mean to the tune of almost 5 times the amount of volume of any other listing ever. Clearly, this is top of the market's mind. And when something is the top of the market's mind, we dig into it here at Option Pit. So I want to welcome on Hannah and Leisha, and we're going to start breaking down what's happening with SpaceX, what we've seen before, and what we think we'll see going forward. And we're going to talk about how to trade it using the options. It's going to be a really fun hour. So make sure you stay with us as we jump into it right now. Let's bring on Hannah and Leisha.
Good morning, Mark.
Ladies. How are you?
I'm great. I'm excited to talk about this. Good morning, everyone. Welcome. We have put together probably an hour of programming for you. Programming. What am I on TV? We've put together an hour of value. We'll call it that.
There you go.
Everyone is out there talking about SpaceX, and we were having a conversation yesterday, and we said to ourselves, let's not just talk about it. Let's actually live trade it with everyone. So that's what we'll be doing today. We're going to start by breaking it down. So yesterday was day one, like Mark said. How does it look? What's happening so far? We're going to walk through that. We'll compare this to some other IPOs in history and show you what's similar, maybe what's different. We're going to talk about the trade that most people are making on SpaceX. Spoiler alert, they're just buying upside calls. We will give you an upside call that you can buy, but we're going to explain something about what happens when there's a lot of upside early interest in a new in new options like on SpaceX, because it can actually be a difficult trade to win. We're going to walk you through that. And we have a better trade that you can make. Towards the end, Leisha is going to walk through her pitchforks so far. So if you are a pitchfork lover, stay tuned. If you don't know what a pitchfork is, you're going to want to know soon. She's going to show us what some upside price targets, downside price targets might look like on SpaceX. So we'll walk through that. Leisha, I love those earrings. Those are so fun.
Oh, yeah.
I should have put something on. I just cruised right into this.
And you know what? I forgot mine.
I was noticing that, but I wasn't going to bring it up. You still look amazing.
Yeah. Well, yeah. I mean, I threw everybody for a loop with the red shirt on a Wednesday. Everyone's like, "What's going on?"
I'm not going to lie. I saw you wearing that at the beginning, and I checked my phone. I was like, "Is it Thursday?" It's not.
Yeah. No. It's Synthetic Thursday, everybody. All right.
I see that. So here's our agenda. I already ran through this. We are doing 2 days of this. We may do some days next week too, so stay tuned for the schedule. But we're doing this today from 10:30 to 11:30. We will be back here tomorrow at the same time. So let's get into it. Mark, let's talk about yesterday. First day for SpaceX options. What are we looking at here?
I mean, just an incredible amount of volume. The previous record for an IPO was set by Facebook. It did 345,000 contracts in its first day. SpaceX did 1.722 million contracts. Just an absolute incredible amount of volume. That's the equivalent of 172 million shares of stock. So this thing is traded more than NVIDIA did yesterday. It traded more options than Tesla, than Apple, just about outside of SPY and SPX. It was one of the top 2 or 3 equities in terms of trading across the entire market. So day one, just incredibly liquid options.
You guys can see here on your screen the exchange breakdown of where SpaceX traded yesterday. Leisha, you have some experience that I'd like to talk about for a second. You were the chairwoman of the SIBO allocation committee back when you were trading on the floor for a few years. Can you explain to everyone here what that is and why it's important and what it has to do with understanding options that were just greenlit on SpaceX?
Sure. Back in the day from 2000 to 2003, I was on the allocation committee at the SIBO. And 2000 to 2002, I was chaired the committee. And our job was to allocate the stocks that were coming down the pipeline. Back then you had to wait a couple months actually before the stock would list options. But our job as a committee was to give out the stocks to the best trading pits. Now, mind you, there were all kinds of trading pits. IBM was giant. Some were smaller. My pit was like 20 guys. IBM was probably maybe 180 or so. But what we were looking for were deep and liquid markets. We wanted narrow markets. We wanted them to guarantee us that they would better another exchange's bid or offer if they happen to be bidding more or less. It was a time of all these new exchanges were listing. SIBO was losing its dominance as the only listed options exchange. So it was very important that we maintain that dominance with deep liquid markets. And that just means narrow. It means 500, 1,000 up. Any broker can walk in and expect to be filled on at least 500 to 1,000 contracts at the price displayed on the screen. But we also had a fine line to walk because we couldn't keep giving the good stocks to the bigger pits, right? We had to feed the other pits too. And it was pretty crazy. And I constantly had taps on the shoulder coming to my pit.
Oh yeah, Leisha was everybody's best. Leisha was everybody's best friend when she was the chair. It was like, "Hey, Leisha, can I take you for drinks? Hey, Leisha, we're all going out to dinner. Do you want to come to dinner?" Because when a berry of a new allocation came on, everybody wanted it. Like the entire pit. So when we wanted an allocation, they would hand you this form and every market maker would sign it, promising to assist the specialist, the DPM, the head market maker, in making those markets super liquid. So the entire pit wanted those, and we would just be, she was everybody's best friend during that period of time.
It was pretty crazy.
All that context is good. I just want to bring it back to this opportunity. So what you guys should understand about what that means, what that job meant for Leisha, is she had basically an expectation of what she needed early option markets to look like. And so when they were deciding, okay, this stock is going to get options, which pit should we give these options to list? Because it wasn't like everyone got them, only certain ones did, which is why we're showing this on this slide. But she had an expectation of, this is what I need the options to look like once they list. So you'll notice today when we go through this, she might say things like, oh, this market is narrow, or this market is wide. It's because she has experience looking at those markets and understanding what is a good market for traders and what is not necessarily a good market for traders. And yesterday, Leisha, you said to me that you were surprised by how narrow the SpaceX options are so far. Narrow sounds bad, but it's actually good. It means that you can get good prices. It's just the distance between the bid and the ask is when you're saying that it's a narrow market, right? And it actually means that you can get good prices and it's fairly liquid. So we'll go through that more, but that's an important reason why you should be listening to Leisha about this, that's for sure. Let's look specifically at the options for yesterday, Mark. So here's the SpaceX options: calls on the left in green, puts on the right, the total in the middle. It was almost 180 million in net premium that traded. This is yesterday alone, correct?
Yeah. So what you're looking at is the amount of options bought on the offer. So how much was outright bought as opposed to trying to like finagle a bid? Like what was like the I want this right now demand, right? Think of what this is showing you is Garrett and I were talking about Carvana walking to the dealer, looking at a car and saying, I'll take it. That is what this tells us. And on these metrics, we had traders spend $180 million in option premium. That is a massive amount of money that eventually either expires or turns into stock. And when you have that, what that tells us is that there was a lot more buying yesterday than there was people out looking to sell.
Sure.
And just is a clear example of the amount of demand for SpaceX options at launch. That premium number is giant. There was more premium bought in SpaceX than there was in the SPX yesterday. Let's put that would be the easiest way to describe that.
The SpaceX options are obviously super liquid because of all of this money flowing in and out. For those of you that are here, I want you guys put a 1 in the chat if you've traded SpaceX already. So if you've bought stock, that you can count that. Or if you have traded options already, put a 1 in the chat. If you have not traded it yet, but you would like to, put a 2 in the chat. I just want to see from who's here already, how many of you are already trading this or maybe have made some trades so far. We are going to talk you through really 2 trades today. One, if you wanted to just buy some upside calls, we do think SpaceX is going to continue going higher. We'll talk about the reasons for that and the trend for that. But then we're going to give you it's our number 1 trade. Mark isn't buying the upside call. He's going to make a little bit of a different trade instead for some reasons that we'll show you guys. Okay, I'm seeing a spread of some 1 and 2s. Looks like about a 50-50 mix.
Yeah, I would say, something like that. 50-50, 60-40.
If you are and you want to trade this, we are going to do that today. So stay tuned for that. It's coming up in just a few minutes. Now, Mark, we talked about some other when we're looking to explain a trend, capitalize on a trend, figure out how we want to trade it, the first place we look is to the past. In the past, what has happened on other IPOs and when other options were listed, what did those trends look like? So we're going to show you guys 3 or 4 examples of past IPOs. This one's pretty recent. This was actually just in about mid-June. Mark, talk about, so you're just looking at the stock price right here for, I think it's Cerberus Systems. And then we're going to look at the implied volatility, which is just what the price of options on Cerberus Systems looked like right after the IPO. And we'll go through a couple of these examples here. Why do you want to show this one, Mark?
Well, this is kind of when an IPO is really hyped, this is kind of what we see a lot of times. The stock will boom out the gate higher. And then it may kind of settle at a price, trade there for a little bit. And then a lot of times you will see them sink. A vast majority of IPOs are lower than where they IPO'd after a month of trading. Cerberus Systems, which was super hyped. It was oversubscribed by something like 50% in terms of the amount of people that wanted the IPO. And it's still down. This was hands down the most exciting IPO we had seen in a couple of years. And it's down, and on its lows, it was down 50% from its highs. And now here's the option prices. The options listed on Tuesday the 19th. And you could see how they spiked up. And look where they were just 2 weeks later. And a lot of times people get wrapped up in implied volatility. They're like, implied volatility. I don't want to think about it. I don't want to understand it. I consider this chart just a view of how much do options cost, right? How much does it cost across the entire sphere to buy an option? Now, on the 19th, an option, if you bought an option, it costs you about $125. By the beginning of June, that price was $92. Now, think about it. If I bought a stock for $125 and 2 weeks later, it was trading $92, how happy would I be with my purchase?
Unhappy.
I'd be miserable. I'd be very unhappy. And when you go out and buy an option on the day of an IPO, can you stumble into a win? Yes, it can happen. Like, Cerberus dropped from 350 to 210. If I bought an option and sat on it, I probably made some money, but not nearly as much as I could have if I traded the smart way, because I won in spite of my option getting absolutely murdered, not because I made a good trade. And this is the normal volatility pattern that we see when IPOs first come out.
Here's another example for you guys. This is on ARM Holdings. This was back in end of 2023, but this is the stock price for the first 4 months. Follow some of the patterns Mark just highlighted. First day, it pops up, and then you might see it drop off. This one actually rallied a little bit going into the end of 2023. Here's the chart of the option prices on ARM right after options were greenlit. You'll see again, higher on the left, lower on the right. That means that the option prices were more expensive to start and they got less expensive over time. Another example with Rivian, same trend. Spikes up at the beginning. There's a little bit of a correction. This one actually had a downtrend to start 2022. I remember a lot of hype around this IPO for Rivian. If you guys remember this, there was, because I think at the time they IPO'd, I don't think they'd even built a car yet. Maybe like demos, but they had a bunch of pre-sales. They hadn't actually really made a sale. It was kind of a wild IPO. I don't know if any of you guys in the room remember.
They SPAC'd at the perfect time, end of 2021, right at the peak of the YOLO COVID push. And then, obviously 2022 was a very bear market. Hannah, go back to that ARM IV chart, because this ARM was the last, this was one people knew about. It was a really well-known company. There was a lot of excitement around it. And I want to show, because I think this is kind of how SpaceX might play out. You notice those options do hold up for a couple of days when they first list. And then shortly thereafter, what happens? They fall off a cliff. From
Right.
the 26th of September to the 6th of October, those prices fall from 50, the option prices fall from 56 and a half down to 46 and a half. That's like an almost 20% drop. Again, if I bought a stock for 56 and it fell to 46 in a 2-week period, I'd be pissed. And that's what you're doing when you do this. So this may look more like how SpaceX trades over the next couple of days.
So the key difference there is instead of just a quick spike up and then a drop off, this is a little bit of a plateau to start where it stays expensive, and then we get that kind of drop off.
Yes.
Let's look at Rivian's. Rivian was kind of started really expensive and then was a little volatile over time, but this one fell off a cliff pretty quickly.
I mean, think about this. If you bought the first day, you paid $175. By December,
I know
that number was 95, and by the end of December, that number was 75. In a month, the options dropped 100 points.
It's crazy. Yeah. And so why does that happen? It's just because the demand at the beginning is so overhyped because of the IPO and people want to pay it, and the market makers know that and they price it a certain way. I mean, Leisha, you've seen this a million times. Can you kind of explain for people here why that even happens in the first place?
Well, especially on a big, super hyped up one like SpaceX, biggest in history, the market makers know the demand is there. They know that the people are going to come running to buy those options. So they're going to jack them up as high as they possibly can. But then it does end, right? It ends and people get burned. We have a great example. You talk about that going down 100 in a month. This dropped 100 in freaking an hour. Sorry, in an hour.
Yes.
It's amazing. But I have to give them credit. They know what they're doing, and the markets are narrow now, and it will be very fun to trade.
You'll hear some people call this IV crush. We're going to show you an example right now of exactly what the IV has looked like on SpaceX so far. We're going to show you an option from yesterday, a call option, and we're going to show you what happened to the price of that option as the day went on. So we'll kind of timestamp it and walk you through it. This is just SpaceX price so far. Obviously, everyone has been following this. It's spiked up a bunch over the first few days. We'll talk more towards the end about what we think the long-term direction is here, and Leisha's going to show some of her pitchforks. But we're going to walk through an example of what the IV has looked like. How expensive are the options right now on SpaceX? So I'm going to show you first. This is a screenshot of calls on the left, puts on the right. We're going to look at a specific example in here. But this is just a full screenshot of what the orders looked like at 9:30 a.m. Calls on the left, puts on the right. We got those strikes in the middle, okay? And we're going to look at this specific option. I'm going to blow it up for you. I know it's really small. This is the SpaceX 18 June 2026. So they expire tomorrow, 210 calls. And we're going to follow what the price of these looked like throughout the day. And the reason why you guys want to follow this, if you are thinking about trading SpaceX, which it seems a lot of you already have. If you're thinking about trading SpaceX, or you already have, you can buy calls and they can lose. And we're going to show you an example of that right now. So at 9:30 a.m., again, these are the 18 June 2026 210 calls. They cost at 9:30 a.m. between 15 and 15.80. Now, that's the bid and the ask, so we'll just show you both of them. Here's where SpaceX stock was at 9:30 a.m., okay? So we're going to trace this through. We all know yesterday that SpaceX basically went on a tear over the first hour. So if I own calls and SpaceX goes on a tear over the first hour, should my calls go up or down? Put your answer in the chat. If I buy the 210 calls and SpaceX goes up, which it did, it went up about $5 in the first hour. This should be the easiest layup of a trade ever. Yes, they should go up. Let's look at what really happened. By 10:30 a.m., those same calls, the 210, 18 June 26, had gone down 50 cents. Okay? You might be looking at this and saying, what the heck? How does that happen? The stock went up $5. It's way above 210. You had the 210 calls. This can happen. And this is what we call IV crush. You might hear people call it that. At this time, when we started trading these, the IV, so what we were just looking at on all those IPOs, the IV of SpaceX was 257. The translation there is that these options, when you bought them at 9:30 a.m., were super expensive. So yes, the stock went up $5, but your calls went down 50 cents. If this has happened to you in the chat, if this has happened to you in trading and you've bought calls and you've been like, why didn't those go up? It is very possible that you were caught in something like this, an IV crush. Some people, you might call it a squeeze. But this can happen. And this is why we wanted to go live today and talk to you guys about this and show you a better trade that you can be making that will actually capitalize off of this phenomenon instead of getting stuck in the tidal wave of it. By 4:30, SpaceX had kind of moved sideways and then down a little bit. So those 210 calls, they would have actually lost yesterday. By 4:30 p.m., they were only around $6.80 or $7 was the value. Leisha or Mark, anything you want to add to this? Anything I missed in that explanation? Are you guys with me? Did that make sense? See what happened there?
This is a question I've been answering for, the 16 years. I bought calls. Why did I lose? And we put out an edit. I wrote everybody a note about what could happen if you bought calls on SpaceX that we put out on Tuesday. This is kind of par for the course when it comes to trading. You are going to see options immediately list very expensive. And then there's this balance with SpaceX that's really unique in terms of retail buying versus institutional selling. So remember, retail got 20% of the SpaceX IPO. 20%, that's it. So those of you that got, 5 shares, 10 shares, maybe as much as 100 shares, that represented 20% of the IPO. Goldman Sachs, JP Morgan, they got the other 80%, plus they had a little kicker where they could buy a little bit more if they hit their metrics, and they did. So they have all this SpaceX stock that they're sitting on. What are they doing? They're not locked into that stock. But if I'm SpaceX and Goldman was my broker, if I IPO and Goldman goes out and sells the stock, that sets a very bad precedent. And other big launches are going to be like, I'm not using Goldman. They sold the stock right after they got their IPO off. I don't care how much money they made on it. So what do? They go into the options. They start dumping calls. And so you have this balance of folks such as yourself wanting to buy calls because it's SpaceX, it's going higher, versus Goldman, who's sitting on 15 million shares of the stock, selling calls to try and produce some income against the options. And that's that balance that you see playing out. And again, they have 80% of the stock. So they, no matter how much retail goes in there, Goldman has an appetite for it.
Leisha, I think you had the IV numbers. What was the IV on SpaceX on these options towards the end of the day? We started at 257.
Oh, I do have it. Give me 1 second.
Is the 210s?
Yeah.
Yeah.
We were tracking the 210s.
End of day, the IV closed 171.
Thank you.
Wow. So almost, 100-point swing. Do you guys think that, so that we laid this out, this is an example from yesterday on what happened with some calls. 2 questions. This is only looking at one strike. Did the same thing happen on other call strikes?
Yes.
Oh, yeah.
Okay, good. So this happens, it's not just like we picked one weird example.
No.
This happens on all the strikes. Makes sense?
No, this happens
And then number 2,
universally.
would you guys anticipate that this, could this happen again today? Could this happen again tomorrow?
Yes.
Okay.
Absolutely. And it actually is going to continue to happen. There's something a little unique about SpaceX we'll get into. But what you're looking at, again, I'd be pulling my hair out. I paid $257 for a stock. By the end of the day, it was 171. Can you imagine if you bought Berkshire and that happened, Hannah? People would be, to quote my father, people would be having to, it's a good thing that glass buildings have sealed windows, because otherwise the option guys would be jumping out of them.
I forgot I had this slide. It does show the IV at each timestamp here. So you can see the top 257, but an hour later, it had already dropped to 208 an hour later, which is freaking insane. And then by 4:30, we were down to 182. So the conclusion for you guys here is this. If you are going, and I see someone just asked this in the chat, DJG Dog, which SpaceX call option should we be watching? Okay. Two things. Number one, we just walked you through why you don't want to buy a call, but we know that you guys are probably going to do that anyway. So if you go to do that, let's talk about what the right call would be to buy, and we'll give that away for you. And then we're going to walk you through the trade that you really should be making that is going to have more upside and can protect your downside. And we'll talk about that right after that. So Mark, we can switch over to your screen if you want, or Alicia's screen.
Sure.
Let's look at if someone were to buy a call on SpaceX today. We know they're going to do it anyway. We might as well give them the best opportunity. Let's walk through that and show them what the best call is. And then we'll get to the trade that we're actually going to make.
All right. So this is what you're looking at. All right. Are we going to get into skew here in a little bit, or do I want to do it?
We can talk about it. We can talk about it a bit now.
All right. So what you're looking at is what is the implied volatility on every individual strike in SpaceX expiring in June, and I can add July if we want. I thought we would just look at maybe like a one-day trade, like a little YOLO trade, and then I'll give some ideas on July maybe in a little bit. So, folks, what do you notice about how these IVs move by strike? What do you guys notice, and girls?
You mean the Nike swoosh formation?
It does look like a Nike swoosh, doesn't it?
Yeah.
All right. And what's important is as you move up in strikes, you can actually see the YOLO demand. Do you think institutions are out buying options that expire tomorrow at the 235 strike in SpaceX? The stock is 193. Are they buying the 220s or the 215s? Or the 210, even the 210s now? No. This is the market makers reacting to retail order flow that is all bidding up out of the money options on calls. And you'll notice that at the money is by far, right? It's trading 193. Cheapest options are the 185s, the 190s, the 195s. And the reason is institutions come in and they sell at the money calls. They want that premium. So you've got institutional order flow pressing down the right at the money. So they want that juicy premium. So they don't mind selling maybe a slightly less, a slightly lower implied volatility, because that's going to have the most juice. That's what the institutions care about. And they know this stuff is expensive. So they're selling at the money. And then YOLO's buying out of the money. And then on the downside, we have seen some institutions actually going in and hedging a little bit. That's more in July. If I pull up July, the demand looks a little different.
Yeah, a lot more to the put side.
A lot more the put side. These are institutions coming in and hedging. So you have institutions down here buying, cheap options. So you'll notice, same story. Look, between 205 and 150, you have kind of this trough of option prices, and then you get YOLO on the upside and crash protection puts from institutional buying, and that sets up this entire curve, right? There are kind of 3 areas that trade within an option. At the money, all right, at the money, that's major institutional flow, crash protection, institution and retail. And then YOLO, that is all retail. Institutions are not out buying the July $250 call. They're not. That is.
Can
that
we look
is
a little bit at
the?
Can we, if you go to the options chart, can we just look at what some of the volume looks like on some of those strikes that might be YOLO money? I'm just I want to look at some of the volume there. So what I'm hearing you say here, Mark, while you pull this up, is that if I were to want to go buy a call today in SpaceX, I want to buy like the at the money call. I don't want to be looking to be the YOLO money out in the future. Those are the people that are going to get their shirt handed to them.
You're going to have to spend a little bit more, but you're going to but you're actually far more likely to win. So for instance, obviously SpaceX was above $200 earlier. For most of the day, the 200s have been at the money. So obviously those have the most volume, but look, there's been 20,000 of the 220s traded. These expire tomorrow. So this premium goes up in smoke if SpaceX doesn't rally into these tomorrow. 20,000 of the 220s, 15,000 of the 230s, 12,000 of the 250s.
That's crazy. That's tomorrow.
Tomorrow, there is still a bid for the 280 calls. The 280 calls are 50% out of the money. SpaceX would need a rally, $80 for those to win. And there is a bid for those. You go out to July.
Well, you know what they say, Mark.
Yeah.
To the moon.
Exactly. Diamond hands. Hannah, there has been 14,000 of the July 300 calls bought.
That's crazy.
Bought. Do you think?
Yeah.
I mean, that would be an incredible move. They're looking for an over 50% rally between now and July 17th.
Right. Well, and also from what we just demonstrated walking through the calls from yesterday and how they changed over time, you can be right and you're still swimming against a current to try to fight for that win. So yes, I mean, these expire tomorrow. The strikes are probably too far for the movement we could see today, and you're swimming upriver. So if you were to buy a call on SpaceX today, buy close to at the money. You're going to pay for it. It's going to be a little bit more expensive, but it actually has the highest likelihood of winning. Correct? Anything you'd add there?
No. And on a relative basis, the two cheapest calls that to buy are the 195s and the 200s. I think the 200s on a relative scale are the cheapest. So if I had to, if you wanted me to YOLO a call, the one I'd be looking to do would be the 200 call. That's about $3.50. And when we look at this on the chart, you'll see why. You are actually paying a little bit more premium than the 195s, but look at the spread between the 200s, and I'll hone in on this. You can actually see how above 200, that's really where the YOLO of the part of the curve starts to take off. So you're buying right before it goes completely YOLO. So that option, I wouldn't buy it. Let me be very clear. I am not buying the June 200 call. I'm not buying the June 200 call for somebody I don't like, let alone somebody I care
Not even
about.
your worst enemy?
Not even my worst enemy.
Let's talk about the trade that you actually are going to make.
Yeah. So we're going to be, the way to make money is what market makers do is I buy less expensive and I sell more expensive. That is how I've always operated. Alicia, exact same thing. We would do two things. If someone sold us something, so we bought an option, we would look to go sell another option against it, something more expensive. And if somebody bought an option from us, we would look to go buy something less expensive from it. Alicia, stop me if you think I'm telling tales outside of school.
And if they were really buying, we would raise our offers.
Yeah. So I want to do the same thing. My approach when on a name like SpaceX is to take money from the YOLO traders. Okay. And it's not because I don't want them to succeed, but if you're willing to pay some ridiculous price for a call option, then I'll sell that to you and I'll buy something more reasonably priced.
Right. Would you say that using that structure, so if you sell a call to a YOLO trader that's going to be more expensive, and then you're buying a call that's closer to the money and less expensive but still expensive, could you theoretically pay for that trade with the money you made off of the YOLO one?
I mean, you can certainly reduce the cost. Absolutely.
Okay.
You know, because I'm buying close to the money, the strike prices, what ends up happening is on a relative basis, think of it this way, Hannah. The YOLO call is like a Toyota Camry that I get to sell at $75,000. Do you think a dealership would want to sell you a Toyota Camry at $75,000?
I can't say I'm currently know what the market for Toyota Camrys are, but I'm going to say that sounds pretty expensive.
It does sound pretty expensive. All right. So it's very expensive. It's like 2x the cost, 1.5 times the cost. So I get to sell the YOLO person a Toyota Camry at $75,000. When I buy my at the money option, I'm buying a more expensive car. Let's stay within the Toyota business. I'm buying a Lexus. I'm buying a Lexus ES350. Same exact car as a Camry, but it costs $20,000 more, right? Mm-hmm. So maybe that call is worth $70,000, but I'm getting to buy it for $65,000 or $70,000. I'm getting to buy it for a fair price. So I'm selling the Camry at a more expensive price, and I'm buying my Lexus ES300 at a fair price. And now I've got a spread where I participate in the trade earlier, so I don't need as big of a move. I'm paying less. I'm selling something that is going to lose a lot of value. It's kind of the perfect setup for a directional play around an IPO.
Okay. I do want to, so let's just go macro to micro. We want to set up a trade on SpaceX. We know that a directional call isn't going to be the best bang for our buck, and we don't want to buy a YOLO call. So we're constructing a little bit different trade that can capitalize on this. There's going to be really two pieces to it. We want to buy a call, and then we're also going to sell a call. Now, when you go to trade an option, one of the first things you're going to look at are your option chain and when the next expirations are for when you actually want to trade. You'll notice at the top here that you can see June 18th. Every option you can see on your screen right now, these do expire tomorrow. So if you've been following us talking about 0 DTE or 1 DTE, these would be 1 DTE options. That means they have 1 day to expiration. These expire tomorrow. Now, if you look at the top of the screen here, the next strike that would be available, we're going out in the future. I think is it July 17th is the next
they tried to add weeklies, and I think they got rejected. I know that they want to add weeklies. Okay. We'll get weeklies probably listed for July. I would imagine July 2nd they'll have them. This is already doing enough volume.
Okay.
That will probably have July 2nd.
Okay, so they'll be adding those in the interim. But today we would want to actually trade the options that are expiring tomorrow versus the ones in July. Can you just reiterate that and talk a little bit about the IV and why we want to do that? Because a lot of people might think, well, June 18th is tomorrow. We really want to do that? The answer is yes.
Yeah. You know, the reason why we like this is because, yes, these options do expire tomorrow, but we can set up a really inexpensive trade where if we get the move we're looking for, our near the money call that we paid a little bit more, but financed with selling that out of the money call, that's going to fully participate in the move. It's going to turn it into pure price participation with the stock. That out of the money call is just going to die by the vine, and it sets up a trade where if we get the move we're looking for, we can absolutely clean up. Now, there's no guaranteeing we may not want to take the other end of that trade and actually go to the downside. My guess is we're likely going to want to play bullish, but circumstances could allow that we decide we want to kind of go the other way. And we do have that similar setup where, at the money options are less expensive and you're starting to get a little bit of downside bid on puts with SpaceX rolling over 7%.
I think this would be a good time, Leisha. Let's pull up your charts. Let's look at some pitchforks. Let's talk about the direction of SpaceX, where it's gone so far, what you're seeing, and where you think it might go from here. Because obviously to trade the option, we have to pick the direction. It sounds like we're leaning calls, but let's look at what we see.
Yeah, on my 5-minute, I've created a pitchfork that it followed very well. Actually tested the median line here this morning on the opening, and we have traded lower. We're breaking down at the moment below my lowest moving average on the 5-minute, which is, what is that, 190.28. So, doesn't mean what we did here, we closed the gap, created yesterday. Sometimes you need to close the gap before you can continue moving in the same direction. What we need to do is watch it pretty closely here. I wouldn't recommend a trade till later this afternoon. The overall market's kind of selling off here. Qs are Broadcom staying strong, of course, but here's my daily. Maybe we have a little shooting star change in trend. Still too early to say, though. And then here's my 30-minute, also breaking down below that lowest, and my 10-minute. So some support here. I think we need a little more evidence trading into this afternoon before we decide on a direction, personally. Plus, we have the Fed.
Well, exactly. So what we're going to do for this trade today, you guys, if you're zoned out, listen up. What we're going to do for the trade today is this. We're not going to actually give you the trade right now. Since we want to wait and see which direction we're going to pick, we need some more action here over the day. And we need to see what happens with the Fed at 2. If you've been following what Leisha does when she trades 1 DTE, she's usually releasing those trades and those opportunities around 3 p.m. or 3:30 p.m. Eastern. The reason why we wait till that time is you can see as much volume throughout the day as possible. You can track the trend, you can see the direction, and you can still get cheap options at the end of the day. If we actually wait till this afternoon to buy, it'll be cheaper than if we were to buy them now, correct?
Right. Cheaper, yes.
So to get today's trade, listen up, to get today's trade, because we're not going to post it right now, we're going to text this out this afternoon, sometime between 3 and 3:30. So we have a link for there's a text list. You have to sign up for this text list in order to get this. So can we please post that link in the chat? We'll post it for you guys right now. Click on that link and just put your phone number in there and press subscribe right on that page. It's in the chat right now. It says join option pit report, SpaceX confirmation page. Click that and it'll bring up a page that says SpaceX live trading June 17th and 18th, where it says phone number right there. Put your phone in and click subscribe. As long as you are on this list, we are going to text out the trade today around 3 or 3:30. In order to prepare people for that. So we've talked about there's probably going to be 2 pieces to this trade. Mark or Leisha, do you want to just walk through that? So when at 3 this afternoon, after I've signed up and I got my phone and I get a text from Option Pit and it'll say Option Pit SpaceX, and I'm like, oh, there it is, and I click on it. What might those instructions look like? And can we just walk someone through how they would want to execute that?
Absolutely. If you want to flip to my screen. So let's say that at 3:15, SpaceX is still trading exactly here, right at 190. And Leisha and I decide we want to set up a bullish trade. The first part of the trade is going to be the call that we're buying. The first part of the trade is going to be the call that we're buying. So let's say
Okay.
I buy the 195 call.
Hold on. Leisha's barking real quick. Just kidding.
All right. So we would buy the 195 call. Let's just say this is all hypothetical. And let me get my date to today so that it looks, this is all hypothetical. Here's what the payout on a call looks like. Very simple. Now, what we would do against it, and this is part of why I want to show you this. Here's that June skew. So here's the 195 calls. I'm paying 157. We get a big jump at 205 and 210 and at 220. And lo and behold, the 215 calls are still worth $1.25. $1.25. So I am buying an option that is $5 away, and I'm paying $5. If I want an option that is $25 away, I'm still paying 25% of that cost, right? 5 versus 125, right? That $1.25, that's that Toyota Camry for $75,000. That $5, that's my Lexus bought at fair value. So what we end up with is a spread where we're buying the 195s and selling the 215s, and we're paying less than $4 for that. You do the math on that. It pays out over 4 to 1 on my money.
I just wanted to walk through the math because for someone who's never done this before, they might not understand like the credit versus the debit versus the total paid. So I just want to show you guys, like, again, this is not the actual trade we're making. We're just showing you when you receive the instructions later how you'll actually use them.
Yeah. With this setup, I'm paying $375 at these prices. And if we were somehow trading 215 tomorrow, I would make about $1,625. That is an incredible risk reward. And what I like even more about that is I don't need that huge move. I'm going to win at anywhere above $198, $198.75. So if I wake up and we're trading above 205, I'm a really happy camper. I'll be up over 100% on my dollars.
We'll give you this information when we can give this information when we send out the alert too. This is what we're looking for the stock to behave. We don't normally give exits out for free, but we will talk about it in the alert. It will say to you, this is what we're looking to happen. This is where we'd be looking to sell. Of course, like you guys understand, we're all adults here. It is up to you to actually buy this and sell this. We can only go so far telling you the instructions and how to do it. We try to support you in every way possible. If you have more questions, we do have a great support team. So if you feel really confused and like a fish out of water, do give us a call right now or talk to us today before this trade comes out, and they'll be happy to kind of walk you through it. There are a couple questions in the chat I want to toss to you real quick, Mark, just so that we have this all addressed. So you technically will enter this as a spread. It will either be a call spread or a put spread is what it's going to look like. DJG Dog asked about selling naked calls. That's not what you're doing. This is a spread. So there's going to be a top side and a bottom side. So you don't need to worry about that.
Yes.
I do like this question from Northport, Florida man. This is smart. Why not buy the at the money and sell 2 out of the money for a 1x2 so you could sort of lean it? I assume there's reasoning for that decision, but for some more sophisticated options traders,
that would make total sense. The reason why we don't do that is that the margining on a second call is going to be astronomical on a thing like SpaceX. When I sell a call, if I were to sell 2 of the 215 calls, that second 215 call is going to have a margin on it just by itself of about $21,500. So this would go from a spread that has a margin of $375 to a spread that has a margin of about $22,000. If you have portfolio margining, makes total sense. But for 98% of traders, the spread itself makes a lot more sense. And folks, if you get confused when you see the order, the easy way to think about this is we want to look at the stock price and then look at the two strike prices. If the stock is 190 and the strike prices are 195 and 215, Leisha and I are going to want to buy the strike price that is closer to that stock, right? So if we're trading 190, 215 is a lot further than 195 from 190. We're going to want to buy that 195, or if it was a put, a 185. So that's just a way to think about it. We're buying the closer to the money option.
Right. We're not the YOLOers or the big downside protectors. We want to buy the one that's closer to the current price. Great question from G Potts. Should we have received a ping on our phone acknowledging we've signed up? Yes, you should get a confirmation text. Realize though, there's over 450 people here. I'm sure just about all of you just went and signed up for this. So there might be a little bit of a delay. Just give it a minute, but you should receive a confirmation text. I see some people saying they have got theirs. AKA SHEY, not sure how to say that username, asks about a butterfly. We won't be using a butterfly for this trade. It doesn't mean we won't ever, but for today, we're looking probably for either a call spread or a put spread. I did see a good question about the width of the spread, how far you might put the strikes apart. We have just a few minutes more. You guys want to talk about how you set something like that up? That's probably a little bit more of a sophisticated answer, but for some of our more experienced options traders, how might you pick the sides of a spread?
Yeah, so we're going to look at the straddle price, and I don't want to go down too deep a thing, but if I buy the 190 call and the 190 put, I'm now betting on how much it's going to move. I'm no longer betting on direction. That trade costs me $14. So in order to make money at buying the call and the put, I would need SpaceX to move $14 away from 190. So that would put it at 204 or 176. When I set up a spread, I always want to have my long option inside of that, and I typically want to sell my short option, in this case, like, if maybe the 215 calls, just outside of that, or definitely outside of that move. So, the 195 calls, those are well within a $14 range of 190. The 215s outside of that range. So YOLOers are holding that option up, not the likelihood of that ending up in the money. The market is betting pretty heavily. In fact, the 215s are going to end up worthless based on how these options are pricing. So that's how I do it. It's a little into the weeds. I'm happy to teach a little bit more on that, maybe a different day, but it has to do with what is the market expecting for a move, and then setting up the trade around it.
If that was in another language to you, don't worry about it. We'll teach and talk about that more. We also teach and talk about things like that in our paid services. So if you would like to become a member of one of those, give us a phone call. Moose did ask, what if we can't trade spreads? Moose, if you can't, you really have two options. Number one is call your broker and figure out getting the level of clearance that you need for your specific brokerage to be able to trade spreads. Your second option, and this is probably a better option for you today, is we did give a directional play on SpaceX. So just buying calls. Mark, can you revisit that trade just for a second for someone who might not have spread clearance or don't want to make the spread? I just want to make sure I got the strike right before I post this.
Again, let me be very clear. I would never do this trade. So unless you are dead set on trading SpaceX, pick up the phone and call your broker and get level 2. And be a jerk about it if they give you a hard time. And if they give you a really hard time, move your money. That easy, guys. it used to be a big process to switch brokers. It can be done in about a half an hour with a 1 to 2 day waiting period now. So if your broker doesn't want to assist you in trading options, find one that will. Now, if you insist on buying an option, I would be looking at the. Let me get my.
I think you said the 190s or the 195s that expire tomorrow. I just want to make sure I have the right.
I'm pretty sure I said the 200s.
Okay.
I would be on a relative basis. The two cheapest options to buy are the 195s and the 200s. So if you want a YOLO, the 200s are about $3. That would be my YOLO play. But again, I don't think that's the right way to approach this trade. So again, call your broker and be a jerk.
Mark gave you permission.
Yes.
At the top, again, the only way to get today's trade that we are going to text out to you is to make sure that you sign up for SMS. It's on that page. It says SpaceX big at the top. You can't miss it. If you haven't done that already, make sure that you sign up for that. That is the way that you'll receive the trade. Now, when you get the trade on your phone later today, we cannot put the actual trade inside of the text. It's illegal. You get in trouble with your SMS providers. So what will happen is when you open the text, there will be a link in there and you're going to have to click that link. When you click that link, it'll take you to the trade and an explainer, and there'll be some targets and things in there. So if you open the text and you don't see the trade right away, don't freak out. There's a link. Click the link and it'll take you to the full trade.
Yes.
We also will be back tomorrow. We are going to do this again tomorrow from 10:30 to 11:30. We will obviously be recapping what happened today. We'll look at the second half of today's price action on SpaceX. Leisha, I'm sure, will have some updated pitchforks to share with us, an update on if we've fallen even lower, if she might be adjusting her pitchfork, drawing a new one, and where the price could be headed. We'll also talk tomorrow more about longer term. So this is a very short-term trade. In today, will be out tomorrow. We're capitalizing on some of the short-dated themes that are huge in SpaceX right now, which is that IV is high. We think we can make some money getting paid on that and use some of that as a credit almost to buy a strike that is kind of expensive. It's a little expensive, but it will be less expensive because of the way we've set up the trade. So come back tomorrow. We'll be recapping what happened with the trade, and we'll talk more about what do we think the next 30 days will look like for SpaceX, 60 days, 90 days, and some of the other options trends that might be developing. If, as you notice right now, there's only monthly options available on SpaceX. We do think that'll change soon, and there will be weeklies and other ways to actually trade this. So, Leisha, you want to add anything before we hop off today?
No, you guys covered it very well. Sorry. Yeah.
Any levels today that you're looking for SpaceX price? Like if it crosses this level, that would mean something to you, to the upside or the downside?
I want it to hold here. The overall S&P, I think, looks lower today. Qs are holding up, but S&P is not. I have just found I'm bearish. I have to say I'm bearish. SpaceX itself, I can't say that, but S&P, Qs might be another story. SMH, we got to take a look at. I want SpaceX to hold this support here, which it's been doing right now. We have a nice change in the hammer here.
And if you had questions about whether the volume was going to, sorry, Leisha, finish up what you're saying.
We'll have more information this afternoon.
We will. And if you're wondering if volume was going to slow down, we're at 785,000 contracts 2 hours into the day. So it's going to be another banger here.
That should make anyone who's thinking about trade this, you should feel good about the liquidity. You're not going to get frozen out of being able to get a certain price. I mean, this is trading like nuts. So
yeah.
3 or 3:30 today, we will be texting out the trade. Use that link in the chat. Make sure that you sign up. Put your SMS on there. For those of you that clicked a link in your email to actually join the session today, you might also get an email. It just depends if you did that already if you're on our list for this event. So keep your eyes peeled, 3:30. We will probably be in this chat a little bit. So if you have questions about the trade as it comes out later, feel free to come and ask in this chat. We will patrol this a little bit. And then we'll be back tomorrow. Obviously, I'd trade that in the morning at 9:20 with Garrett. Make sure you tune in for that. We'll have our normal state of the market programming, and then we'll be live again from 10:30 to 11:30 talking more about SpaceX. So keep your eyes peeled for that trade. Thank you, Mark and Leisha. We'll also go over the updated pitchforks and things tomorrow. So we'll talk about that as well.
It's going to be another fun one. Make sure you join us live all morning for the amazing content, trading, and education that we're going to be giving you. So for Alicia J. Leslie, our queen of the candles, we just call her queen, Hannah, our head of product development, and, amazing all-around person. I'm Mark Sebastian. I am your only option. Thank you for spending the morning with us. And as always, thank you, Amin. Thanks, Amin.
Thank you, guys. Let's make some money today. See you later.